right, so today we're going to be talking about Wyckoff accumulation, just accumulation. I want to break it down into the atom of it so that you can understand what Wyckoff accumulation is all about and how to build trade opportunities, awesome trade opportunities around Wyckoff accumulation with a perfect understanding of what you want to do. Of course, I'm going to be discussing the general concept of Wyckoff accumulation, and I will streamline it down to my own perfect and insane understanding that will make you take accurate and precise trades for profitability. A lot of people trade the foreign exchange market, but not everyone is profitable. So this video is actually released by me to ensure that people add one very important strategy, an insane strategy that works, well refined to my own understanding, so that you can be very much profitable. So after watching this video, ensure you share to a lot of people, let them watch it, because this is the most insane Wyckoff accumulation video on the internet. I can beat my chest and say that. So without wasting much time, let us jump into the Wyckoff accumulation concept, and I'm going to be showing you a lot of trades. I'm going to be showing you 6 case studies amidst countless that I have taken with this insane strategy that is streamlined with my own understanding. So let's talk about Wyckoff accumulation. What is Wyckoff accumulation? Let me just quickly tell you what Wyckoff accumulation is. Of course, you must have seen a lot of videos or read materials, and you have crammed what Wyckoff accumulation is, especially the different phases, the selling climax, the automatic rally, the secondary test, the spring, break of structure, and so on and so forth. It is not just enough to cram Wyckoff schematics. You should understand what actually goes on during Wyckoff accumulation, during that period of range. It is important you understand, because no two Wyckoff chart is exactly the same. They present themselves in a very different way. So if you have a stereotype knowledge about it, or a stereotype image about it, you will not be flexible in trading it. So it is better you understand what actually goes on in the Wyckoff accumulation range, so that you can take the most precise trades on it. All right, so Wyckoff accumulation, for what I have here, Wyckoff accumulation phase is a sideways and range. Okay, this is meant to be range. It's a sideways and range. All right. So I said Wyckoff accumulation phase is a sideways and range period that occurs after a prolonged downtrend. Okay, for example, let's say you have a prolonged downtrend. Market is forming a series of lower highs and lower lows, lower highs and lower lows, and it gets to a point, market start moving sideways. Market start moving sideways. Market start moving sideways. Now, this could be a Wyckoff accumulation, because I said it's a sideways and range period. This is a sideways and range period that occurs after a prolonged downtrend. So can you say the downtrend when market forms a series of lower highs? I think I should change this to black so that it can be easily seen by everybody. Okay, I think this is better. Let me make it to pixel. All right, perfect. So this is a prolonged downtrend, lower highs, lower lows, lower highs, lower lows, and markets entered into a range period. And of course, from what you can see, I connected this to the uptrend. That means that market accumulated and moved impulsively to the upward direction. So it is very important to note that whenever Wyckoff accumulation has formed successfully, market is expected to buy, because at that point, demand gets greater than supply. So I'm going to be explaining everything that occurs in the Wyckoff accumulation range, coupled with my own understanding, so that you can get the full picture of it. Also take note that from what I have here, it is the areas where large players try to build positions. During Wyckoff accumulation, there is a lot of manipulation that goes on. The big players try to create a mirage for the retailers to come in and create a ping pong scenario where liquidity is stored in large numbers, and then the big players take out the retail traders before they now move, they sell off all their position before they now move impulsively into the upward direction. Now, most times, Wyckoff accumulation might actually form just on a previous demand area, or rather it might not form on a previous demand area, but once you understand what goes on during a Wyckoff accumulation period, then you should be able to know when market is about to start buying so that you can have a perfect entry. But if market is formed on a previous demand area, then it can even make it much more valid. So from the third thing that I have here, I said this is when dominant traders manipulate the market to take positions away from the retail traders. I said that earlier. So whenever we have Wyckoff accumulation, or whenever we have any ranging market, be it accumulation, distribution, reaccumulation, or redistribution, just take note that dominant traders manipulate the market to take away positions from the retail traders. They allow retail traders to build liquidity. They take out the retail traders before moving impulsively into the direction that they have chosen or they have created and want to move to. But for this video, we're going to be talking extensively on Wyckoff accumulation. Now, let me just show you the textbook pattern of what Wyckoff accumulation looks like, but you shouldn't cram it. I'm still going to explain the manipulation that goes on in that market range. So I'm not going to go so deep into this. So just try to understand whatever I say here. And if you want a more understandable concept of Wyckoff and all smart money concepts, you can actually subscribe for my mentorship. You will never regret it. All right, so this is the Wyckoff accumulation schematic. You can see we have different phases. We have the phase A, the phase B, the phase C, the phase D, and the phase E. But of course, when I'm going to be reforming this, I will just reform it into 4 phases or 3 phases: phase A, phase B, phase C, with respect to my own discovered instant strategy. So we can see the prolonged downtrend that we have here, market forming series of lower highs, lower lows. Now, this PS that we have here is what we call preliminary support. Preliminary support. In this preliminary support, just before markets move into this trading range, we start seeing substantial buyers coming into the market from this prolonged downtrend, just before the final move that the selling pressure will be exhausted. So this is the preliminary support, after which you have the selling climax. Now, from the selling climax, this could be a response from either a previous demand zone or just the exhaustion of sellers. Now, once sellers have exhausted their sell, we have a quick reaction from this selling climax. This is just to show that buyers are now showing interest. Buyers are showing interest. So immediately after the exhaustion of the sellers, we have a quick push-up to the upside, a quick push-up. And this quick push-up is called the automatic rally. This is what happens in phase B, automatic reaction, automatic rally. Then from your phase A down to your phase B, market creates a mirage of support and resistance for retailers to come in. So we can have, from in the phase B, is a period where liquidity is being stored. We see series of equal highs or equal lows, markets coming back to test the selling climax. Of course, from the diagram we have here, you can see we just have 2 tests here. You can see secondary test. This is secondary test in phase B. But in the real sense of it, we can have several secondary tests. So just take note that after the preliminary support, the selling climax, and we now see buyers showing interest, market comes back to test the areas of the selling climax, thereby storing a lot of liquidity. These are the places where you find equal lows, equal highs. Equal lows. You can also find equal highs, but you find more equal lows, market storing liquidity in the phase B. Then what happens in the phase C is that all the liquidity that is being built up in phase A and phase B, there is a move called the spring, which is actually the banks or the large institutions. They take out all the liquidity of the retailers that they've brought into the market by creating a mirage for them. They take out the liquidity, and that move occurs in phase C. They take out the liquidity, and there is a structural break around here. There is an internal structural break, although it is not indicated in the diagram, but there's an internal structural break here that I'm going to be showing you just after the liquidity of phase B and phase A is taken out, or most likely just phase B, because sometimes this spring can be on the same level with the selling climax, or probably sweep all the liquidity here, but still remain in the previous demand that the accumulation might actually be forming. So there will be an internal break of structure here when the banks come in to clear out liquidity, and our entries will be around this. This is always where my entry is. This is always where my entry is. And of course, in this trading range, once you are able to catch a buy from here after you have spotted a break of structure, very, very important. I will state all that in my own strategy. So after you have noticed a break of structure here and you have entered your position, your first target is the highest high that is created in this trading range. That should be your first target. So from what I can have here, or from what I can see in this diagram, my first target after entering this here, that is from this break of structure. Once there's no break of structure here, my accumulation schematic is not complete. So after this break of structure, once I enter into my position, my first take profit is the highest high that is created in this trading range. And what's the highest high? This automatic rally. Sometimes it might not be the automatic rally. It might be something around phase B, or maybe something that formed in phase C. But this is going to be the first take profit. So once market gets to the highest high that is created in the trending range, one thing I also want you to know is that once market breaks above that highest high a little, even if it's by 1 pip, that simply means that market is ready to go more up, which is the sign of strength. Market just shows sign of strength. Once market breaks the highest high in this trending range period, just ensure you break even, secure partials, then leave market to continue, because markets will go higher to higher supply. Of course, you can now use your higher time frame perspective to know where price will eventually get to. But this is just what happens in the accumulation period. And I don't want you to cram this diagram. Rather, you should understand what happens in the diagram. Just take note that in the first phase, the long sell is exhausted and buyers start showing interest. Then in the phase B, markets start building liquidity. In phase C, we have a move that clears out all the liquidity in phase B. In phase C, we have a move that clears out all the liquidity in phase B and phase A. Then market breaks structure and move impulsively into the upside. So that simply means that once you have spotted an accumulation period, you should not go long, or should not buy for long from the phase A or the phase B. Allow market to get to the phase C or the phase D and give you an entry before you actually enter. So this is what happens in the Wyckoff accumulation period. Institutions just manipulate, they create manipulations, bring in retailers into the market, make them store liquidity, then they grab the liquidity. So grabbing of liquidity is always in phase C or phase D. And I will teach you how to make this thing easy so that you don't fall you don't become the liquidity of the market. So I'm going to tell you how to identify the different phases of Wyckoff, irrespective of how it is formed, so that you don't become the liquidity that will be wiped out. Rather, you will wipe the liquidity and be safe with your entry. So let's go back to the chart. Now, let me streamline it down to my strategy. Then I will illustrate it on the chart for you. So this is what I have here. Mr. Peak Accumulation Insane Strategy, what to do. So these are the steps that you should take. Of course, I'm going to show you on the chart now case studies of trades that I have taken in the last 1-2 months, insane trades, and I've been taking it in the last 5, 6, 7, 8, 9, 10 months, and I will still take it in the next 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months, and so on and so forth. So what to do? Now, the first thing I said, allow market to start moving sideways considerably. So before you want to spot accumulation after the prolonged downtrend, allow market to start moving sideways considerably. Then 2, I said, mark out the range period. Okay, I said range person. Sorry for that. Mark out the range period. So I said, mark out the range period in a parabola using the arc tool. Using the arc tool. Sorry for those typo. Mark out the range period in a parabola using the arc tool. 3, do not take any long buy in the first half of the parabola. 3, anticipate the liquidity run move towards the end of the second half of the parabola. Then 3, execute trade only after lower time frame break of structure or low risk special zone. So these are my confluences for taking a perfect Wyckoff accumulation trade, and I will show you countless examples. I'll just show you 4 or 5 examples of a trade I took recently, and that is how I have been taking it, and that is how we continue to take it, except market tells me otherwise. So allow market to start moving sideways considerably, that's 1. Mark out the range period in a parabola using the arc tool, that's 2. Do not take any long buy in the first half, that's 3. Anticipate the liquidity run move towards the end of the second half of the parabola, that's 4. Then execute trade only after lower time frame break of structure or low risk special zone. Now this is what I mean. Once market comes into a downward move, let's say we have something like this. Market comes into a downward move. Let's start ranging. Okay, comes into a downward move. And what happens? We now start spotting market ranging. Spot market ranging. Okay, start ranging. Now, once you have spotted a considerable range, come to this geometric shape side. Click the arc and click a position, click on that position, then click the third. Now, what you should do is connect considerably the support of the preliminary support and the selling climax. Then, of course, drag this to this other side. So let me reduce the size of this so that we can have a good place to write. So I've reduced the size of this. So as I explain my strategy, I will also follow up with what I've written on the screen. So what is here? I said, allow market to start moving sideways considerably. So can you see market is moving sideways considerably? So what I want to do now is actually divide this into two. So this is the first half. So I've divided this into 2. Now, what did I say? I said mark out the range period in a parabola using the arc tool, which is what we have done. So just connect the preliminary support and the selling climax considerably. It might not be a perfect touch, but just something like this. Now, I said, do not take any long trade in the first half. So this is the first half. This is the first half. This is the first half. Do not take any long trade here. This is the first half. Now, this right here, after the middle line, is the second half. This is the second half. So do not take any long trade in the first half. Just watch what market is trying to do. The only time you should prepare for a long trade is towards the end of the second half of the parabola, which is somewhere around there. So you start looking at what market wants to do. So what happens in this place is usually phase A and phase B of the accumulation process. So that simply means that, okay, somewhere here we might have our selling climax. Don't worry, I'm going to show you the chart, but market or preliminary support, market does not come exactly how how you have it in a textbook pattern. So this is preliminary support. Of course, here is your selling climax. Here is your selling climax. Do not be rigid with this diagram. So just know that anything that is stored here, any other test that you have around here, market is just trying to store liquidity. So all these things are what are secondary test, secondary test, secondary test. So markets will store up a lot of liquidity. Market will store up a lot of liquidity around these areas. Around these areas, market will store up a lot of liquidity around these areas. So once we now get to the second half of the parabola, then start anticipating a liquidity grab run, that is a move that will take out all this liquidity, then break structure. This is what I mean. So now anticipate a move like this. You can see market go up like this, then come back, then come back, then we'll see something like this. Market grabs liquidity. Can you see market grabs liquidity, then breaks structure? I think I need to zoom this. So I just want to zoom this so that way. So market grabs liquidity. Can we see? Market grabs liquidity, then breaks structure. From what we can see here, we can see market forming in the phase C or in the second half, lower highs, lower lows, lower high, lower low, lower high, lower low, lower high, lower low, higher high. So market breaks structure here. Then of course, once market breaks structure, markets would have presented a zone. You might say rally-based rally or a drop-based rally. Markets would have presented a zone where you now wait for the retest. Taking your trade and put your stop loss below this zone or just below this liquidity run candle, and you are ready to move. So in this range period, the highest high that market got to, you can say maybe this is the highest high, or probably here, which you can see market has broken structure, clearing all the highs of this liquidity zone. So your first take profit should just be here. This should be your first take profit. So once market gets to that place, you should actually secure some positions. But if this highest high is taken out, even by half pip or by 1 pip, do not close all trade. Just take partials and leave it and target a higher supply. Markets will surely still go upward to take out higher liquidity. This is just how the strategy works. You can now check higher supply. So I said, allow market to start moving sideways considerably, mark out the range period in a parabola using the arc tool. Do not take any long buy in the first half. Anticipate the liquidity run move towards the end of the second half of the parabola. Execute trade only after lower time frame break of structure. Markets can form an accumulation schematic and don't give a break of structure and just break all these lows and start trending downward. You should always ensure that you wait for break of structure. I want to believe you understood all I have been saying since. So accumulation, markets, large traders, large players try to build positions, and they manipulate the markets to take positions away from the retailers, and what happened? They move. So let me give you just 3, 4, or 5 case study of trades that I have taken before. So let's analyze NZDJPY. Some of my trades, I already have the markup there already. This is just for educational purpose. I already have the markup there, or I can actually wipe off the markup and teach you how to identify them and how I got my entries. So let's check out the trade. Let's check out NZDJPY, a long buy I took some weeks back. This is my 1 hour time frame. This is a long buy I took weeks back, and I'm going to show you exactly what I saw that made me take this trade. You can see I already have my schematics on. This is just an educational purpose video. So, or let me do this so that you can understand perfectly. All right, okay, let me just clean everything. Okay, let me just clean everything. So this is it. Market has been moving downwards for a long period of time. You can see market trending downward for a long period of time. And when market got to this place, I noticed that market started moving sideways considerably. And of course, I'm looking at my right-hand side. Market actually took out all these lows. And reacted off. Market took out all these lows and reacted off this demand right here. And started moving sideways. So I was very much interested in this accumulation and trying to see if I can see my perfect confirmation. So you just have to zoom in so that you can spot whatever is forming very well. And if market gives you an entry, you can actually take it. So from what we can see here, I can see that market is actually in a range. Market is in a range period. And I was interested in seeing if market will give me confirmation. It gives me confirmation, I take it, but if not, I leave it. So just to ensure that we understand this, of course, this is definitely my selling climax. This is definitely my selling climax because this was where the sell was exhausted. So all the support that I can find just before the selling climax is my preliminary support. So everything I have here, I've told you that you don't need to be rigid with what you know. Just ensure that your brain is flexible. So what I have here is my preliminary support. So this is where substantial buyers started coming into play. The markets came down, look at the rush down, and this is my selling climax. That means, yeah, we can see substantial buy. We can see a reaction of buyers. So this is like my automatic rally. This is my automatic rally. I don't actually bother to draw out my diagram or to identify all these places, but I just understand what goes on. So just to ensure that I am precise, I draw my arc tool. And just try to connect it so that I can take the trades at the second half of it. So just draw it considerably. Take it down. So try to connect. Can you see I've connected this, all the support that I have here. So I've connected it like this. Connected all the support right here. So if I decide to split this diagram into two, so if I decide to split it into two, that simply means that I'm not meant to take any long buy in the first half. So this is the first half, right? This is the first half. I am meant to secure a buy at the end of the second half of the parabola. So that is where I'm meant to secure my buy. So I said anything that occurs after my automatic rally, anything that occurs in between, market is just trying to store liquidity. So all these things are what? Liquidity. All these lows are liquidity. So markets store liquidity. Now, after market store liquidity, the next thing I am looking for is a liquidity run move that will clear out all the liquidity between phase A and phase B, or that all the liquidity in the first half and some part of the second half. So let's see what's transpired in the markets. So now this move up here just gives me a confirmation that market is just actually showing sign of strength that we can actually go so bullish. So I'm just waiting for this liquidity to be taken out, because in the period of accumulation, markets deceive retailers, take them out before moving. So these are retailers. These are retailers called support, and they are buying. So I'm waiting for a move that will clear out that support. Then I can now wait for a lower time frame break of structure. So let me see what I have. Okay, this is 1 hour. I think I should go to 15 minutes. Don't worry, I'm going to zoom in very well so that you can see all what I am doing. So let me see. I think the liquidity has been grabbed already. So I need to wait for lower time frame break of structure. So let me zoom in. Can you see all the liquidity has been grabbed? And market even came to as low as what? As my selling climax. So I need to now zoom to spot a break of structure. So an internal break of structure. So from what I can see on my 15 minutes, I can see market forming series of lower highs and lower lows. Let me show you. Market forming series of lower highs, lower low, lower high, lower low, lower high, lower. Market started forming series of lower high, lower low, lower high, lower low here, and we have a higher high. So this is a break of structure. Let me reduce this to 1. So can we see that this is a breakup structure? This is a breakup structure, market forming lower highs and lower lows. So look at my high here, low, then a higher high. So what is the last demand that we had before market broke structure? Can you see this last push down candle before market broke structure? So that becomes my valid zone that I want to take this trade from. That becomes my valid zone that I want to take this trade from. And of course, my markup is just going to be right there. Right there. And of course, my stop loss is just going to be below that zone. I think just about like 12 pip stop loss. Just about 12 pip stop loss, or maybe 10 pip stop loss. And of course, my target, of course, I told you that the first target, let me go to my 1 hour. I told you that the first target should be the highest high in the trading range. The highest high in the trading range. And what is the highest high in the trading range? So that means this is my first target. So my first target is somewhere around 171 pips. And of course, let me see if we have a higher time frame upper zone. Of course, I can see a supply here. So I will be anticipating this high to be taken out. If this high is taken out, this is my next take profit. This is my next take profit. And this was exactly where I targeted. This was exactly where I targeted. This was where I targeted, about 275 pips was exactly where I targeted. So let me go back to my 1 hour. Oh, sorry. Let me go back to the 15 minutes. I want you to see how the trade activated. I want you to see how the trade activated. It hasn't activated yet. I'm just trying to spot. Okay, so let us see how this trade activated. Then I will now go to my higher time frame and show you the final target. So all right, so let me press play and see what transpired. So can we see market activated nicely within my zone? Market activated and the movement started. Market activated and the movement started. I see the movement started. Perfect, perfect. My last push down candle before the structure was taken out. Market activated nicely, nicely. So let's go back to my 1 hour so we can see my target. Very simple trade. So with respect to my 4 hour, this is my final target. If this high is taken out, but my first take profit is going to be this high. So you might not need all this diagram again. So this is my first take profit. Let me label it. This is my TP1. That is the highest high in the ranging period. So this is going to be TP1. TP1. It's going to be TP1. And of course, once this is taken out by a pip, even if it's just a pip, I'm going to target a higher supply. So and I have my TP2 here, TP2. So this is going to be my TP2. You can see how market activated nicely. Very nice. So let's check. My TP1 will be around, my TP1 is around 182 pips. My TP2 is around 275 pips. So let's see what market did. Market kept going up. Okay, you can see market hit my first take profits. And what happened? Market actually broke above this high. So I secured some profits. I locked in my position. Then I'm targeting my 275 pips. So let's see if market eventually got there. Let's see if market eventually got there. It was a swing trade, but I was extremely sure the market was going to get to the next supply. And right there, market hits my final target. Very simple, NZDJPY, very, very simple. Very simple. So case study 2 of another trade I took. Case study 2 of another trade I took. My EuroJPY. EuroJPY, very simple. EuroJPY, very simple. Sorry, I have so many confluences. So it's not just accumulation I trade, it's just one of my perfect scenario kind of trade. There are some trades that are perfect scenario kind of trade, and you just want to eat everything from them. So I'm not going to clean up what I have here. I'm just going to use my cut to cut this so you can see what happened there. You can see what happens there. So from what we have, this is my parabola, and I love this trade because market just tapped into a higher time frame demand. So this is a higher time frame demand. We have liquidity stored around here, and this is a demand, a psychological level. You can see how psychological this is. Market sold from here, then bought from here. So this is a psychological level, and we have liquidity stored before that level. So market tapped into this demand, which is something very good for me. And I implemented my insane strategy. So this is my parabola. So this is my parabola. This is my parabola. So what we can see here, market won't present itself exactly as it has presented itself before in other chart, but of course, you can see what happened here. We had this to be our selling climax. This is our selling climax. This is our selling climax. Or we can say from what we have here, market didn't actually present itself so clean, but at the same time, I understand the concept of liquidity grab and I understand what it is that I'm looking for. So we can see markets entered into a period of range, and I've drawn my parabola. So I'm not expected to take any long trade in this half. I'm not expected to take any long trade in this half. I'm going to take or look for a long trade towards the end of the second half of the candle, of the range rather. So from what we can see how markets came here, entered into this ping pong. We can see market storing liquidity. You can see liquidity. These are lows. Then we had a move that took out liquidity right here. We had a move, look at the move that took out liquidity right here. Clear out this liquidity, this, but still in the demand area. Then what happened? We can see the last high that we had. Usually the move that goes to take out liquidity, once it breaks structure, that is what we are looking for. Once it breaks structure is what we are looking for. So we can see all this liquidity stored here. What happens? We had a move that took out this liquidity, created this high. So we have high, low, lower high. Of course, this is a shift in market structure. Then what happened? We had a break of structure. Can you see? So we had a break of structure right here. I think I need to delete some of this. So we had a break of structure right here. This is a break of structure. So we had a break of structure right here. Now market came, stored liquidity around this place, and this zone has not been mitigated. So that was where I had for my entries. And what happened? Market's price came to this area, then created a high in this trading range, and market started coming down. So I've already seen break of structure with the move that cleared out liquidity. So this was actually my entry, and it was just 6 pips. And let's see if markets played. So this was just 6 pips. And my first target is actually the highest high in this ranging period. So let me see how market transpired. So market came down. Markets kept moving and kept moving. So I already had my limit set, and market activated. And of course, there was movement. Perfect. Let me go to my 1 hour so that the movement can be fast. So we can see these stuffs are very simple. Very simple. So my first take profit is going to be the highest high created in the trading range. And if market breaks that high, that means I'm going to be targeting higher supply. So price kept going, and right there, it's my profit. I can see how market took out the supply. So you can actually go for a higher supply, maybe somewhere around there or even higher, but I was already out of the trade, and price kept going. And that is by the way, so you can target higher supply. This is just extremely simple, extremely simple. This is the second case study. I don't know if I should give you a third case study on another trade I took. Okay, I won't explain it. I'll just show you. Same thing here for GBP USD. Same thing. Okay, let me just explain. Let me explain to you guys. The same scenario, always and always. It is so insane, guys, so insane. So look at what I have here. Market has been in a downward move, and what happened? Market entered into a ranging period, and I took my parabola, drew it just like this, and started noticing what we have here. So from what I have, I cannot take any long trade in the first half. I can't take any long trade in the first half. Same thing that I said in the first analysis is what I'm saying. I can't take any trade in this first half. I will have to watch how market take out liquidity and then ready to move. Of course, we can see market moving sideways. Market didn't present itself exactly as other accumulation, but I understand what happens. I understand when I need to see a break of structure. I understand when I need to enter my trade. So from what I can see here, in between this first half and the second half, you can see a lot of liquidity stored that is in phase B and probably phase C. So I was anticipating a move that would take out major liquidity. So I spotted this move down here that took out liquidity. Look at this move that took out liquidity. And of course, I saw something very interesting in my 1 minute. That was why I marked that out. And I had a limit set there. It was an explosive trade for me. If you come to 1 minute, I just want to go to the time frame where I spotted my opportunity. If you come to the 1 minute, you will see a clean order block that has not been mitigated. And of course, there is liquidity stored before this order block. So I just knew that markets will need to come and run all these stops. Then tap into this order block, unmitigated order block, then move. So that was where I had my limit set. And it was just a few pips, just about 9 pips stop loss. So that was where I had my limit set because it was too obvious that this was a liquidity run. Can you see? Liquidity run. Market came, built liquidity before this demand. So this is the banks. And that was where I had my limit set. And I was waiting for the trade. So let me go to a little higher time frame and let's see how price played out. So I had my limit set there. And of course, my first take profit is this high. This is the highest high created in the ranging period. And it's just about 192 pips. So I had my limit set there, just a 9 pips stop loss for a 192 pips. So let's see what transpired. Price kept moving, had my limit set, and it was a perfect activation and price moved. The same thing over and over again. This is an insane strategy. It was a perfect mitigation. And price hit my first take profit. Now, can you see that market broke above this level? So you can target higher supply. And let's see what price did. You can target higher supply. Price kept moving. Look at this supply that I have here. That was the next major supply. And price moved. And of course, I think price got to that supply. Yeah, got to that supply. Perfect. I can show you countless examples of trade that I've taken, countless examples. I've shown you GBP USD, I've shown you NZD JPY, I've shown you Euro JPY. This thing is insane. It's an insane strategy. GBP CHF too. I won't explain this, but I just want you to see it. The same thing. Go and check Y. I think I took this trade around December 20. Go and check Y. The same thing over and over again. Of course, I have same for Euro GBP. Same thing over and over again. Over, can you see? Over and over again. Same thing, same thing. So guys, this is what I have to tell you about accumulation. And I want to believe that the eyes of your understanding is enlightened and you really, 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 really enjoy this video. I'm so sorry that this video is long, but the content is worth it. You can watch it over and over and over again. This is an insane content. And meanwhile, this is not all about Wyckoff accumulation. I tell my mentees deep stuff. So if you need to register for my mentorship, just ensure that you connect with me. My reach, my link to my reach is in the description box of this video. Subscribe to this channel. Tell every trader that you know to subscribe and watch amazing content. This year is going to be filled with amazing content. So subscribe, turn on the notification, share, and God bless you.